Hello everyone, this is today's video analysis for July 1st, 2019. Today we're taking a look at the AUDUSD, the Australian dollar versus the US dollar for today's trade analysis. Now over the weekend we did get some trade news for the US, and that has caused a little bit of a pullback higher, a retracement for the US dollar that has seen some appreciation in the near term for the dollar, which has, for currency pairs like the AUD/USD, seen a little bit of a downtick on these currency pairs. When the US dollar goes up, that's what happens. We see a downtick on pairs that have the US dollar as the second currency within the pair. And here on the Australian dollar, we see it pulling back underneath what was previous resistance. That's the pink zone, right smack in the middle of the chart, right around the 0.7000 or 70 level to 0.7015. That's the pink zone, 7,000 to 7015. Historically, blue circles, you can see resistance around that pink shade area. Last week we were looking at potential resistance there. It got above it. And then this week we're right back down below it. We could see historically around the pink zone as well support, and I'll just kind of highlight a couple of those real quick. Right here you can see some support, and right back here you can see some support. So we know the pink zone with some fact. There's not too much to talk about here. There's fact. This pink zone is a significant decision point. It's a significant price handle, 7,000, 0.70. So again, significant price handle. We've seen historical support resistance around here many times before. So we know it's a significant decision zone for the market. Yes, you and I, we have absolutely no control over the rise and fall of the market, but what we can understand about it is that it's a significant decision point. And if the market, the Forex, is making significant decisions around this point, you and I would also consider those decision points as well. Let's zoom it in a little bit. And of course, the near-term trend has been bullish. That's not too hard to see. As the dollar was going down previously, before this past weekend, we saw the AUD/USD going up. That's the way that works. And again, we capped out at resistance right around the 100 period moving average at a resistance high for the day today, and we're pulling right back down under that pink zone. We think about terms like bearish engulfing candle when we're looking at things like what we're looking at here, where we had a smaller blue candle closing right around the 0.7022 level on Friday. Today's candle opening higher than that, the red candle opening higher at 0.7027. So today's candle opens 5 pips higher than Friday's candle closed, and now we're back below the pink zone. So we look at these bearish engulfing candles as a clue that there's a stronger presence of sellers for this currency pair, or the other way to look at it is a stronger U.S. dollar taking over control from what was the buyers here, or the sellers of the dollar. So it's showing us signs of turning around is what I'm trying to get towards here. So as we look at it, the trend was moving up prior to this high. We're now back below the pink zone and 7,000. So for the day today, as long as this stays under the pink zone, I don't think there's any good reason to buy this currency pair. I think if anything, we look for opportunities to go short under 7,000, target back down to the yellow zone. Why the yellow zone? All you have to do is look at this blue circle and know that under the pink zone, the yellow zone was support. So if we see an opportunity to go short under 7,000, the pink zone, we target the yellow zone or lower. There's no reason why it wouldn't go down here to the purple zone if it stays bearish and gets through the yellow zone. So first target yellow zone, second target the purple zone. The risk right now is that the dollar sells off again and this turns around and goes back up right above 7,000. So I would really actually like to wait for the daily candle to close under 7,000 to increase our confidence, but we don't have to. Let's take it down to the 4-hour time frame, and as we get down here, there's that same trend line there, and we can see clearly bearish engulfing. We're underneath the pink zone. So really the only move for the current moment here on the Aussie dollar is staying short under the pink zone, targeting the yellow zone or lower levels. There's no good reason to buy this unless, for whatever reason, the dollar sells off, we get right back above the pink zone. That turns our suspicions back to the upside. So keep an eye on this today. If it stays under there, we'll look for short opportunities for the Australian dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.